Hey, welcome. I'm Laban Johnson, CMO of Abundance Asset Management, and I'm joined with Chris Perkins, CEO, CIO, COO, all the C's, all the O's. Chris Perkins, Abundance Asset Management, and he's also our chief, the most important, the chief investment officer. And we are today is the 31st of March, 2023. It is the end of our first month of live trading. And so we wanted to get back to everyone and let everyone know how we did. And first question for you, Chris, today. Did we follow rule number one?
Of course, Laban. For those who don't know, rule number one is don't lose money. Rule number one of investing. And rule number two, never forget rule number one. So, we take that very seriously at Abundance Asset Management. So we never realize losses. Of course, we have trades go against us. We're not here to try to guess the direction of the market. And we're not trying to say we're geniuses and we know exactly what the market's going to do. What we're here to do is control our reaction to what happens with our trades. So.
Awesome. So, and speaking of reacting, I think that there was a month of many things that one could react to. So it was probably very trying for you. Let's recap kind of what went down this month and how you feel overall about the performance of the strategy in its first month of trading.
Well, the major news this month was the banking crisis, the run on banks, right? And everybody was in fear at the beginning of the month of what might happen in the financial sector. And the news of the Silicon Valley Bank failure on March 10th had everybody pretty worried about what was going to happen on Monday. And so this spiked volatility, which is actually really good for us. So we're selling puts on days like that. And I had a couple of phone calls over the weekend, like, you're selling puts in this environment? Like, you're crazy. What are you doing? The market's going to crash like crazy on Monday. And, I'm like, well, I mean, if it does, I kind of hope it does, because then I'll get some shares. And it turns out Monday it was up, the QQQ specifically that we traded was up 1.38%. So it just goes to show you, it doesn't pay to trade with fear. So we just try to maintain that abundant mindset that if we.
What do you think was driving that gain whenever in the QQQ when everybody was expecting the market to pull back?
Well, one of the things that may have driven it is that the QQQ contains no financial stocks. So it's 100 of the largest non-financial companies by market cap. So just the fact that there's no financial, like no banks in it, money could be retreating from the banks and heading into the, holdings of the QQQ individually as well, not just into the QQQ, for instance.
Right. It's just kind of whatever the market decides to do, which is why we don't time it, because we don't control it. We don't know what the market's going to do. So it's not really a great strategy to just buy and hold.
Yeah. Yeah. And so, this month, the QQQ overall was up 9.4%. So within our business model and our strategy, we look at the long term. And long term, 9.4% a month is just not sustainable. I mean, if you annualize that, it's going to work out to 112% return. So again, not trying to predict the market, but if it's pretty unlikely that this continues to happen next month, the month after, right? It may. I'm not saying it won't, but we'll just continue to use our strategy. Things are working exactly as our financial models have predicted. So
has the QQQ ever done that kind of performance in any given year?
No, not 112%. The record year was 110% in 1999 in the dot-com bubble. Yeah, that was right in the beginning of the dot-com bubble when everything was going crazy.
I'm trying to remember how old I was. I was pretty young and dumb.
Yeah. Yeah. So, it has had outlier years of 50% or, somewhere in there. But even just based on our trading this month, we're looking at about a 32% annualized rate of return for this year. And again, past performance is not indicative of future results. But we're just going to continue to trade the strategy. It's a long-term investing strategy paired with short-term cash flow.
Right. And this is just the first month. Where are we in terms of deploying the strategy? Is it fully up and operational? Or
It's operational, but not matured. So in order for the strategy to mature, we need a pullback in the market because we need to acquire shares. And the only way that we acquire shares is if the market pulls back, because we don't buy when the stock is on a run. We're going to buy pullbacks in the stock. So in order for us to end up with shares and get that 50% allocation to shares and 50% in cash, which is our target, we need a bit of a pullback in the market. But I mean, we'll take the cash flow in the meantime. That's fine.
It'll happen. It's gotta happen eventually, right?
Yeah,
And
it'll
it doesn't
happen
have to be the
eventually.
entire market.
The thing is,
Just,
we don't have to wait for the strategy to mature in order to make money. That's the beauty
right.
of it. Yeah.
That is amazing. So we're just, we're just getting started. Just, the airplane just running down the ramp and just taking off and getting some air in its wings, basically at this point.
Yeah, and there's bound to be some turbulence. I mean, next month, I can't expect that it will be, the same results that we've had this month of, about 2.5%. But we just keep trading the strategy, and in the long term, the compounding of income from options will prevail.
How did the strategy do its current performance compared to our expectations, our models?
It's right in line with our expectations. So we've been modeling this out for a few years now. We've traded the stock on really volatile assets like Tesla and Apple. We've traded the strategy, sorry. And then we went to the QQQ because it's diversified, has a history of outperforming the S&P 500. And that's the overall mission here, is to outperform the S&P 500. So in most market scenarios, our option strategy, once it's matured, will outperform the performance of the QQQ or the underlying asset that we trade with it. So if the QQQ outperforms the S&P 500, and once the strategy is matured on the QQQ, it outperforms the S&P 500, then we will inherently outperform both of those. Yeah.
Now, on the flip side of our performance, there's risk, right? What is the biggest risk to the strategy going forward?
So the biggest risk is that we suffer a serious decline in the asset price itself, and it continues to decline with very few green days and all deep red days. In that scenario, we end up buying more and more and more stock, and then we end up being fully deployed with very little reserves on hand, and then all we're able to do is sell calls on some of those shares. So in that scenario, our drawdown will not be as deep as the asset itself if you were just owning shares of that asset yourself. So there is some protection there, and that's where we gather our outperformance. So in those scenarios, we must just be patient. If the market doesn't recover, it'll be the first time in history that it doesn't recover. It always has in the past, and we must maintain this abundant mindset that eventually it will, because the masses buy high and sell low, and you can't do that forever. No matter how much money you have, you'll go broke if you buy high and sell low too many times.
Right. I think you said once you can only make that mistake so many times.
Yeah, exactly. But you can buy low and sell high an infinite amount of times. So we're just going to keep doing that.
It sounds like a better strategy.
Yeah, exactly.
So going forward, what's our next milestone, or what are we expecting going forward?
We're just continuing to network with people and educate them about our strategy. I mean, a lot of people that I talk to, they don't even realize that a strategy like this exists. So I always think people are afraid of public markets, and the solution to that fear is education. And so if we can teach them about what we're doing and they can see the power of the strategy that we're using, that'll make them a believer eventually. And then, the foundation of all this is relationships, right? So we're just nurturing relationships with investors and with people that want to trade their own money as well, right? So we just want everybody to be able to have some financial freedom in their future.
That's awesome. Going forward, if someone wants to learn more about the strategy, the fund, where should they go?
You can go to our website, www.abundanceassetmanagement.com, and you can find me on LinkedIn. You can find the Abundance Asset Management page on LinkedIn. There's calendar links in there, and schedule a call with me, and it'll be me that you're on the call with, no one else. So I do the investor side of things as well. Talk to you about the risk, the rewards, and I want people to be fully educated on it. Savvy investor is a loyal investor. So
Awesome. I definitely appreciate all the education that you've given me about the strategy up to this point and going forward. And we're learning, live now. We're learning. We learned on the benchmarking data in the past, and now it's happening. So it's amazing to be a part of this. I definitely appreciate being here. Appreciate you joining me this afternoon to give us our update. Looking forward to the next one in a month.
yep, for sure. Me too, Laban. Appreciate all you do for the fund as well.
Thank you. Thank you.
All
All
right.
right. Talk to you soon, Chris.
Yep. Have a good night.